Market crater today with the NASDAQ closing down 5.5% and the S&P closing down 4.5%. But some names actually held up. One of those names actually is Tesla. Why the stock was down 4%, you can see very clearly in here, we did close below the 200, but we held on the 21-day moving average. This is kind of unusual when something like this blows up and you see this kind of pressure, and we're going to get into that stay to the end because we're going to go through the indexes and exactly why the market imploded today. When you see things like this, just pay attention to it. It sets up a really very simple landscape for you. You can just see that if you took out that 290.58, you could see how you could possibly come back down here and test 277. That might be your trigger, but right now you're in no man's land. I actually bought calls on this today, and one of the core reasons was because it's holding that level. So as you're aware, we've been in this trade for some time. We scaled out again, and then we came in with the remainder, and this is what we're dealing with. This is why you scale out in markets like this. It doesn't matter if you're going to call it a bull market, a bear market. Did we bottom? Did we top? It doesn't matter. What matters is that you make money. Your job as a trader to make money. Please make sure you subscribe to this channel and click all notifications, the bell. The purpose behind these is that they are timely. If you were watching yesterday's video or you watched the live stream today, you would know that this CPI was a very big deal. We've been talking about it since Saturday's top 10. And I'm going to explain to you what happened today and how this could happen again. What the heck happened with some of these names and where we're going from here. So you see Apple trading up and going right into that 21-day and having a great day. This was actually one we bought in the trading room. We sold a portion of it here into the close. The whole purpose of that was then to utilize our stop, which was roughly our entry or a little bit under our entry right here. So by doing that, essentially, and honoring that stop, you had a free trade. So even though this got decimated today, using good sound money management principles will keep you out of harm's way. Now, someone's going to look at this and they're going to show you a chart and they're going to say, oh, this was easy to read. No one is selling that chart going in the CPI. Nobody. There are things going on here that we're going to discuss in a moment that have nothing to do with technical analysis. It's all macro and what's coming out that is moving the market. So there's nothing here that you could have looked at. You could have said, maybe we're going to stop here. There's nothing technical about that. And I want to really hammer that point home. But if you look across the board, absolutely nothing was safe. Nothing was safe today. Look at Nvidia and that breaking down, making new lows. This is one we talked about before. The chart looked awful. Then we started to rally. I thought we might gap fill. We did not gap fill. We went the other way. You're really setting yourself up to test some of these other levels. The most troubling thing, and I think it's best to go through, what happens next. Could you see 123 on that? It's a possibility. It depends on what happens tomorrow with PPI, and we're going to go through that. The larger scope of the issue is what can we use that's going to help us determine what to do next? Panicking's not going to work, right? I can panic all I want. That's not going to solve my problem. What we need to do is come up with a game plan. Now, what you'll notice is this is anchored VWAP. That's saying, you can put them everywhere and eventually talk about that they're going to work. There are times where they work using these low levels or peak levels. I think using anchored VWAP makes a ton of sense. Because it just shows you where all the players are. Now you can see how you're rounding here, the 50-21's crossing. On this date, on the 26th, you broke on the SOX. On this date, the 30th, we broke on the Qs. Okay, so it's very clear that the SOX is leading. So if the SOX is breaking down and we're right on support, and this is support 351.64, you need to make sure that you hold that. If you break that level of support, the probability of the Qs breaking that level of support goes up dramatically. And keep that in mind. Are there ways to play this? Of course. You could see people go out there and play FNGD, and it moved very nicely today. But technically, if you were to look at this, are you buying that going CPI is going to be bad? Because now you're not analyzing. You're making calls. You're making directional calls in the market. And that is just bad news because it never worked. Okay? Eventually, you'll be wrong. We had people today in the trading room that decided that they wanted to go long this, and they crushed it. It's not my kind of trade to buy SQQ when the market is down 3%, but the trade worked, right? You have to do what works for you. I'm pointing these out for a reason. And now you're all the way up here at 47. And your RSI is 87. I don't know what the PPI will be tomorrow, but I have some understanding of how it's calculated, and we're going to dive into that in just a moment here. What I would focus on is if you break on the Qs, focus on bear ETFs. Okay, I have a post on bear ETFs. Take a look at what they are and then make a decision on if these are some names that you might want to look at tomorrow. I don't know that we're going to break here. I don't know that you are, but you're going to have to watch that 291. Now, let's talk about what the heck happened today in the market so we can understand it. What came out with CPI? Why was it important? And why can it happen again? So this is how we started the day. 2 o'clock in the morning, German CPI came in at 7.9%. You remember that outrageous number that we had over a month ago. We actually touched base on that yesterday. And now what you did is you just kind of kept going along, and then eventually we came out at 8:30 in the live call today, and now you had these numbers come out and they were all higher. Core CPI was higher. Core excludes energy and food. And then you had CPI, which includes everything. It did not come in negative. It came in at 0.1. But I think that we should just take a look at that number for a second. This is the month over month number. And you can see how these numbers were substantially higher versus what we came in at, even though we came in at that level. That is significantly lower than anything you've had since 2022, right? You've had nothing in 2022 there, nothing in 2021. This is year over year CPI. And I want to be clear, I tend to use free sites when I do this so that anybody can go and do this. Try 7 days free, investing.com. You can go this and pull up this data yourself. It's all free. If you go here and take a look at these levels, this is where you peaked. Then you come out, next level, right? 8.5, next level, 8.3. No matter how you want to point it, and even though it's slow as molasses, we're going down, okay? This is going down. So what was the issue? This is an article from Brookings. They do a lot of deep work on monetary policy. You can just go to Brookings EDU if you want to read these papers. I tend to read these things. Housing represents about a third of the value of the market of the baskets of goods, services that are used to track inflation, the consumer price index. Housing's a third of CPI. Housing in general lags. Why does it lag? Because you're already tied into a lease. The next lease comes out. It usually lags by about 6 months. If you just kind of take a look at where CPI on rent is versus where the rent index is, it shows that this can continue to happen because these people are going to have to sign new leases versus the people that are already in. So when that number comes out and it's higher and people don't drill into it, they just go, inflation's rampant, it's ramping up, we have an issue. And you saw the Fed today, I think that we went to 40% on a 100 basis point raise for next week, which I think is pretty insane. But the point being, that's what triggered us all day today and triggered the. And you can just see that that selling is incessant. Now, tomorrow at 8:30, you have the PPI number coming out. This is from BLS.gov. Since PPI does not have complete coverage of its target set of scope services, a number of consumers services include CPI that are not included in the PPI. Among the most important of these are educational services and residential rent. Just to be clear, 33% of CPI, as we just showed you from that Brookings article, is rent. 0 of that is in PPI. That was the big move today. Take what you want from that, and we'll see what comes out at 8:30 tomorrow. Watch your VIX tomorrow. I'm going to leave you with this. Just watch the VIX tomorrow and see how it acts. On top of that, if you like the kind of commentary where I'm going through a macro view, please leave a comment below and let me know because I can do more of that. I've actually thought about doing some macro content and then how that actually ties into the market. And the reason for that is this. The majority of people are looking at this as a technical trade, and why there is a technical portion of this. The reason that you peaked here was inflation. The reason that you stopped here was that peak CPI number. So understanding how to read these numbers is pivotal. And every single move that you've had that has technically broken us down has been a Fed move or an economic data move. If you understand those moves, you can prepare yourself, not predict, but prepare. So if that's helpful, please comment below and let me know, and please like this video. Thank you very much, everybody. Have a great evening and trade to win tomorrow.